And over to Tom. Tom Williams.
Yeah, hi everybody. Yep, Tom Williams here, speaking to you from Worthing, which is a little coastal town on the south coast of England. Not too far from the beach. If you hear a few seagulls squawking around here, we seem to have a lot. There's a batch of them nesting on the roof of the house next door, which they do every year. And I tend to feed them, admittedly. That makes them squawk more. But anyways, I sort of enjoy that. But anyway, thank you, Peter, for the introduction. We got Rita here, who's very good at trading, as you have heard in the past. And hopefully everything's going to go fine. Now, we've got a chart up of the S&P 500 futures. Now, there's no reason why I specifically put this up. It just happened I was clicking through it when Peter started. So it's up to date for yesterday. No, sorry.
This is up to date now.
No, sorry. Yeah, sorry about that. Thank you, Peter, for that. It's running live, of course, you know. And here we can see that we got a widespread upload closing on the high as it races up towards this old high, which is usually, you infer that's a sign of strength built into the S&P 500 future. Right, we drew the trend line here, which proved useful on the lows here. There's a bit of a signal there. What's that say, Peter? Can you click on it?
Let's have a look. Strength coming in.
Yeah, strength coming.
Don't think on the other chart, Tom, on the daily, you were looking at the trend lines on that, weren't you?
Oh, well.
That looked very good.
Okay, so that's the future anyway. There's a slight problem here where it went up a narrow spread look on no demand. Right, that's why it failed to reach that top trend line. You could draw a trend line through these two highs, right, the first low here, which may or may not prove useful. Could you do that, Peter?
Yeah.
First two highs, first low. That's it, there, and the first low. And
there it is.
Can't see very well. Oh, is that it?
It's a trend channel I've drawn, so it's pretty horizontal.
Oh, it's horizontal, yeah.
As is the bottom line, funny enough.
Now, the thing is, though, we've drawn that, right, and we can see how these trend lines work. And I find it very, very difficult to look at the chart with no trend lines on there. Now, the thing is that when you see a widespread up like that, closing on the high, which is today's action, as it races towards an area of resistance, market wants to go up through that. But the problem at the moment is there's no volume. But this market's only been open, what, 3 hours or so. So we have to wait to see what happens there. But of course, what I would suggest, we will look at some shorter time frames. Okay, put the cash market up. The S&P 500, that's it. That's it. Now this is the cash market of the S&P. It's doing the same thing. Look, up it goes, widespread up. Okay, but look at these trend lines, how useful they are. And they were drawn back here, look. They are. First 2 points of support, first point of supply. That's traditionally the way Wyckoff suggested that you draw trend lines. Now, you can put all these quarterly lines on if you want. I personally don't look at those too much, but there's no reason why you shouldn't. But when the data reaches a trend line, right, you can judge or get a good idea what's going to happen. Okay, now here on this bar, I believe that was, when was that, last Friday?
I see the bottom. That was Monday.
Oh, Monday. Oh, that's right, yeah. Okay, I can't quite remember what we said, but this is obviously some weakness here, look. Up bar, narrow spread. Volume has increased. That supply there, definitely. That's why it came off. Now, last Monday, right, it looked as if it might show a little bit of strength. But look, it plummeted down, but it closed in the middle. There was definitely some sort of strength came in there. The volume is very low, look. This here, I'm not quite sure what that would say. What's it say?
Strength coming in.
Oh, strength coming in. So we got a signal on that bar, look. Strength coming in. Right. But because the market is devious, it's cunning, it's out there to get you. Tuesday, look, is marked down. However, right, there's a little surge in volume. Right, on that little surge, the volume, on that surge of volume, look, it closed in the middle, hitting that trend line. So this is where the support came in to cause this up move like this. So it's definitely some buying there, look. Although it's not all that easy to see, but if you analyzed intraday time frames, like hour or whatever, you'd see the support coming in. And this was really, I suppose, like a shakeout. So that was Monday, Tuesday, Wednesday, look. And this is Thursday, because it's only up to date till yesterday, because it's a cash market. Okay. Now, if you've got any questions, please type them in. We've got Rita here and Peter that will look at them. And we enjoy answering your questions, to be quite honest. Now, we apologize for not doing the newsletter last weekend. Now, I must admit that we've done that deliberately because they hadn't put the newsletters up, or one was a week late. What the point of doing a newsletter? So it takes quite a bit of effort over the weekend. Rita and Peter have to come up here, devoting several hours of their time over the weekend, and they got children and everything, right? And it's not put up. So we thought we'd shake them up and we'd have a protest. So instead of standing outside the town hall with our placards, we just refused to do a newsletter last week. It seemed to work because apparently now the mechanism that's used in the forum is updating.
It's all working.
Go on, Rita.
Hello. Yes. I did a little test today, and I put up an old newsletter, which I think perhaps hadn't gone up because of previous problems, and that worked instantly, actually. So we'll be okay for this weekend. Sunday we're going to do it, and also now Tom can respond to any questions in the forum as well. So everything looks like it is working.
Right, thank you for that, Rita. But no, we enjoy doing the newsletter. It's not hard work for us. What's good about doing a newsletter is because it's being published and we got Rita here typing it out, you tend to put a bit of effort in to try to make sure it's as accurate as possible. And of course, you know, we're putting things on the line where we attempt to predict what's liable to happen next week, and or perhaps what to expect. So you're putting everything on the line here. So, but when you do a newsletter, you are in fact forcing yourself to concentrate. And trading is a game of concentration. And if you can concentrate, wonderful things can happen to you. But learn the principles involved, right? There's only 1, 2, 3 at the top and perhaps 3 at the bottom that you need to really recognize. Today we thought we saw an upthrust in the 50-minute S&P, which proved to be not quite right. But we'll show you that in a moment. What chart's this, Pete?
This is crude oil future daily.
Somebody wants it, do they?
Who's that? John.
John, right. Crude oil future. Well, it's certainly trending up. You could draw a trend line on there, Pete.
There and there.
Yes, it's a daily chart, is it?
Yeah. Yeah.
And the first high. Yeah, so at least we know it's trending basically up. Now, the only thing that's going to stop these markets going up is very high volume and up bars. Right, now if this volume was ultra high, right, then you would assume, although the market came off on that, look, you'd assume that would be the end of the rally here, the end because supply would be overcoming any demand. Now, I never follow crude oil, so I'm just trying to get information out of the chart here. But as the red bars fall, there's a little bit of supply there. I can't, that's better. But there's a test like there, look. Now that's, if you think this is bearish, I would suggest to be very, very careful, because that is a test. Look, whenever you see a bar with what we call a bottom tail. Now, a bottom tail is if you draw a line from the close, look, and more of the body is below the close than above, then that's a test, especially if the volume is fairly low. It is colored pink. It is relatively low. It'd be nice to see it low like that. But at the end of the day, that is a test, look. Notice how it hit the bottom trend line? So whenever you see more of the body below the close of the previous bar, you know there's an attempted test there. If the volume is clearly low, then it's going to go up. So I'd be very careful. They only test markets if they think there's higher prices available. So I would be very careful about shorting that, although this bar looks a bit dodgy at the moment. Is that up to date for yesterday, Peter?
Yeah.
Yeah. You have an up bar, look, close in the middle, and the volume is low. That's technically no demand there on that bar. However, you've got a test on the previous bar. So you've got two fighting, there's two of them fighting here, supplies fighting demand. There's no supply there, so that's the reason why the market went up. Now there looks like a bit of no demand. So perhaps this bar is going to hit this trend line, right? But I'd be very, very careful about assuming this market's weak. Right. You want to put a 15-minute up?
Can you cancel your magnifier?
Oh yeah, sorry. Yeah.
15 minutes of that one. That was the one you're looking at before, wasn't it?
Now, we were looking at this before. There's been a lot of what looked like weakness came as this market moved up today. But I'm saying that, look, there's a test. Always be very, very careful when you see these tests. Now it's here it is, look. A down bar, close on the high. Look, you've got more of the body below the close of the previous bar than above. And on that, the volume is low, look. And that's the reason why it went up. That's a test in the rising market. Unfortunately, there's no signal on it, but there may be in a different time frame. So we're looking at that. But there was apparently quite a bit of supply on the way up. Now, this admittedly did throw us slightly. That black bar there, without question, looks like a sign of weakness. Right? It surges up, closes level, that's why it's black. There is definitely an increase in volume. Right? So, matter of fact, I was speaking to Rita about this, and we decided if it goes up on no demand, we'll short it. But if, and we didn't short it because there is no follow through with no demand. Here, there's a red down bar, and look at that's a test. Look at that low volume. The computer's colored it pink. It's very low compared to the previous two bars. And so, yeah, it's a red down bar closing in the middle. They're definitely testing that apparent weakness there, look. Right? The volume is very low, and that's why it went up like that. It is struggling to keep going up. It's going up on what looks like no demand. I mean, even the red arrows come up here, look.
Up thrust.
Up thrust. They're looking over my shoulder. Up thrust. Okay, read the dialog boxes, please. Don't just look at the signals. If you want to become a professional, you've got to recognize this, the way the market behaves. Without question, it works on supply and demand. And if you see down bars with volume less than the previous two, especially if the spread's narrow, close in the middle, that means there's no supply present at that moment. Now, it may suddenly appear later, but at that moment it isn't. And the market is cunning devious, and it seems to, if you want the market to fall, it's guaranteed it'll go up. And that's something to do with your, as they say, gut feeling, because you're listening to the news, you're looking at these charts, and you're forming an opinion based on not facts. And that's why you get this gut feeling wrong. Trading is extremely difficult, and you've got to master that. And like, for example, if, say, you said, right, okay, my wife's going long and I'm going short. Now, one of us has to win. But the problem is you could easily both lose. So that will tell you a story. Why is that? So it must be inherent in you, the ability of the market to shake you out or do something. Mind, you've got to have live money going to make it really work. So you've got serious intent there looking at it. But if you could recognize the principles involved, right? Now, we've got an upthrust appearing here. Now, let's have a look at this. I'll just have a look at it a bit more closely. Now, that could easily be a genuine upthrust. Why? Because, look, you've got two signs of weakness here. Look. Here in the background, there's one, right? What's that say, Pete?
No result from effort.
No result from effort. And there's another one right next door to it. Sorry. There. What's that one?
No demand.
No demand. So those two signals look genuine. So you've got no effort, no result from the effort, followed by no demand there. However, because the market has been going up and there's momentum in the market, bullish momentum, right, as we've seen with the widespread up, right, but now an upthrust could be, in fact, quite genuine. I'd like to see the volume on an upthrust. There's supply there. That's what they see. There's an increase in volume, look, right? And on that increase, it closed the market down. So there must have been supply there. And that's why we're calling it an upthrust, or the computer is. And look at all these no demand signals here. So the market does, in fact, look weak or running into trouble here, as we can see. Now, it's a 15-minute chart. Right, now, why don't we put up another chart, say an hour, right? It pays to check the various time frames. Now, again, on the hour, look. There's is that the opening of the S&P pit?
It is, yeah.
Yeah, so that's the opening, but the previous bar was high too.
Yeah, that's half of that bar was into the opening, half of it.
Oh, was it?
Yeah.
Right, okay. But anyway, whichever way you look at it, there appears to be supply there when the market opened. Okay, because it's got momentum, the market's going up. But look, at the moment, it's going up on very, very low volume. That means at the moment, it's not going to go anywhere. But you need to wait for the bars to finish so you get a clear picture. It's so dangerous. You must follow the routine properly. It's easier, to be quite honest, to trade individual stocks and shares. That has its pitfalls, I suppose. You know, you've got to put substantial sums of money in there, and you have to wait. But you trade in harmony with the index. We must look at that one day. And we also must look at how to analyze strong or weak bars. As the market goes sideways, you can actually get a very good idea what the market wants to do by reading the bars as they go sideways. And that's a lot easier than you might think. But we'll do that one day.
Any questions, Rita?
Yeah, we have. Oh.
You can answer now.
Gordon, we do not have the FTSE at the moment. Tom doesn't have that in his data feed. Sorry about that. But of course, Philip Friston is the man for that, if you've got a question on that, on the FTSE. Robert asks Tom, on a smaller time frame, if you are scalping, is there certain times during the day that are better to trade?
Well, here in the UK, I know the London boys trade these markets, and they seem to get going about 8 o'clock in the morning. So that's UK time. So, you know, it depends where in the world you're living. But if you watch these markets 8 or 9 o'clock in the morning, very, very often you can see a move taking place or going to take place. And when Gavin's here, he likes to trade these 2-minute charts, and I've seen him trading in 1 minute quite successfully. That's definitely scalping, and it's exciting because it means you can't lose all that much. You make sure you've got a stop in. But if you follow the principle and don't trade unless you understand the principle involved, like all these different time frames, they will act in a similar way. You'll get testing, you'll get shakeouts, you'll get upthrusts, and all this type of thing. It's difficult to visualize how this all works, but it does. I mean, when I was first started and instructing the programmers, the one program said, well, you can't expect that to work in every time frame, it's just impossible. But you check it and it does work. So there you are. But 8 o'clock or 8 to 9 UK time. And Rita likes, when do you like to trade? In the evening?
Yeah, I could actually say something there.
Yeah, hang on.
So what I do, but no, what I yes, Robert, I just do the Dow, and just from a lot of practice and watching for years, the charts, I would generally start, if there's news, I'll have a look, and I would avoid market open though. So when there's news and when there's a market open, it's very, very volatile, and that depends how strong your stomach is, I suppose. But at whatever time it is, there has to be a VSA principle obvious to you. So when I say, I'd keep away from news. Having said that, I've seen sometimes a very nice test or a shakeout 10 minutes after the news, and that's great. I mean, if you're scalping, you can make a nice profit, and very quickly as well. It all depends on your style. But the other time that I do avoid is the last half hour, because often it's very volatile and difficult to see what's going on the last half hour as well. That's just my experience. Okay. Should we put gold up, Peter? Here.
Okay.
We've got a question from Thomas. I'm sure Tom can't really give Gavin's opinion, but he can certainly give his own and look at the chart. So it says here from Thomas, with the recent rise in gold, do you think Gavin still expects a drop to below 1,500? So Tom will have a look and give you his...
Well, first of all, you need some sort of trend line.
He's just asking for a trend line to be drawn.
Here somewhere.
Yeah. Too high and a low.
So,
Bear with us one moment.
here.
Well, wait, hang on. Seeing this going up, look, first 2 points of support there, and say there, and there. That's it. Yes.
All right, I'll pass you over.
Sorry, what's the question?
With the recent rise in gold, do you think Gavin still expects a drop to below 1,500, which is down here somewhere?
Yes, you see.
Well, 1,500, just so you know, is here.
Yeah.
1,520.
So
Yes. I don't like to predict price levels, but Gavin, I know, is influenced from traders in America that look at old levels of resistance and support, which is always worth looking at. That's how trend lines work. But I personally don't do that. I like to try to read the bars as they're unfolding. And as far as this goal is concerned, we've drawn trend line, look. Because it's going up, we've drawn it for the first two lows and first high. And there is actually a sign of strength right here.
Strength coming in.
Strength coming in. What does the dialogue say?
Okay, a down bar closing in the middle or high must be considered strong sense of strong sign of supply. Sorry, rephrase that. Sign of
Demand.
strength. Especially if you're into new low ground.
Yes. Okay. So what it's beginning to say is everything I tell you, because I wrote them anyway. When you see a down bar, right, after there's been a fall, right, it goes into fresh. Now, fresh low ground means there's nothing just immediately to the left, right? And it bounces up, closes in the middle with a slight increase in volume. And that's why the signals appeared, because that means that one or more professional groups have decided to move in and think they can take that up higher. Right, so it goes sideways, but what we look for now is a red down bar with the volume low. Is the volume low there, Peter?
It is.
There it is. Now, actually, that is a very, very clear setup, which I'm surprised. I don't think Gavin would have missed that. But there's the support coming in, look. Right. And over here, look, they lunge it down into a test. And there's a terribly low volume. So there's no selling pressure. That's why it's gone up, look. There is no supply as far as professional money is concerned. Professional money are people that can throw 5,000, 6,000 contracts at these things, and other groups follow them, right? It's whipsawing because of all the public and non-professionals in here. But when you see that, that's definitely a sign of strength, look. Right there. Okay? And that's why it's gone up, look. Now to stop that up move, we're going to have to see high volume like this on up bar, up here somewhere. That trend line that was going up, look. Right? So to stop gold going up, we would expect an up bar. Weakness appears when it appears on an up bar because of the size of their orders. To make a profit, they have to sell at higher prices than they bought at, like any other business in the world. And to do that, they sell as the market is going up, preferably on some good news, or now the end of the bearish gold market's over, we're now going up into heaven, and so on and so on. And they have to unload into that. Once they've unloaded, then that gold stock or gold becomes weak. It's nothing to actually do with the gold, it's to do with the way they're trading it. So I would say that could potentially be strong at the moment. Because you've got this, the reason why is because you've got this in the background. You've got this Tesla, or buying here, and sorry, there's a test there. There's no signal on it. There may be on a lower time frame. So that area there must be accumulation. And that's why it's going up like that. Now they'll want to unload what they accumulated here at some time in the future. And to do that, they've got to do it on an up bar. And as you can see, it's trending up. It's never really, I don't like this predicting price levels, because in the meantime, you may get a sign of strength appear or a sign of weakness. And that will blow your level price prediction. So it's not a good idea doing that, I don't think. But on saying that, Gavin's a very good trader, and he makes money.
Okay, Chris, you asked a question of me. If you're trading the Dow, roughly how many good trades do you typically find in a week? Well, that all depends on the amount of time I'm prepared to dedicate to sitting staring at the screen, and I'm not always free during every day, so often there is one good trade a day. But you know, it's like I can't really answer that question. What I have noticed also is that Monday is not typically a very good day, but you can't say that, you know, every Monday is like that, because often, like Tom will say, on Monday they test the market and the professional money, and even they are not absolutely sure. And I've often witnessed a lot of whipsawing during Monday, and Peter's noticed it as well. So he decided he avoids Monday altogether. But I can't really say how many trades because it all depends on my time. But okay. Oh, another question on the gold there from Gordon. How would you deal with stops on gold? How would you deal with stops?
Well, to be quite honest, I shouldn't say this to you, but I don't use stops, because if I'm in the trade, I watch it, and I can see the strength and weakness appearing. I'm either in or out. But what you're supposed to do is that when you go long, you put a stop under the last low on an odd number. Now, the reason is, as you probably know, the reason is that the herd think in even numbers, and the professionals know where these stops are, and they're liable to gun for them. And they gun for the even stops because they know there's more of them there on even numbers than odd. So, and then when the market moves up, right, you put your stop under the last low of this test. You move it up just to there. But keep it away from even numbers, odd number, and don't, you see, there is a risk that people, you know, say you've bought there and you're up here, you think, oh, look, I'm making some money. Your main thing in your mind is that you don't get stopped out and lose, right? But you must have a clear strategy. You leave the stop there until you see the market fall, test, and then go up. And then you put the stop under the last reaction, which is there, look. That's how you do it. It's easy to tell you how to do it, but running live, then of course you've got all the problems of your human nature, vulnerability of your opinions on, as these markets whipsaw like this. We are hoping to design software in the future that will do a lot of this work for you. And so keep your fingers crossed. And I think you will be very surprised.
Okay. Steve asks, Tom, your volume bars change colours. What determines the colour? It says here, your volume bars change colours. What determines the colour?
You tell her.
Peter's best one for that.
Yeah, hi, there's Peter here again. Yeah, so this package we're using is, of course, Trade Guide at end of day. Very similar with Trade Guide in real time as far as the layout's concerned. And these volume bars are the question, what causes them to be a particular colour? All of this is all, you can customize it and set up any way you want. But the way Tom has it, which is I think the default setting, is that any bar, there's a down bar, the volume is marked red, so that's a down bar closing below the close of the previous, so that's going to be red. The blue bars are bars that close higher than the previous bar. As far as the pink bars are concerned, they've got a different story slightly. If the volume on that bar is less than the previous two bars of volume, then it'll be coloured pink, just to highlight that, because of course volume plays a part in an important part in VSA. It's just to highlight that it's lower. Sometimes you can't always clearly see by eye. That's why it's coloured pink. Now, if there were a black volume bar here, it would be simply because it's illustrating that the price bar in question had closed at the same level as the close of the previous bar. So really, you can change these colours if you're using this program. I know that some traders do that. They have their own colour scheme. But certainly the pink business here is very useful to have. And I personally got used to this scheme, so I keep it the same. So I hope that answers your question. And just so you know, you can colour these any way you like. If you go into the settings for the chart, you can change these to any colours you wish. So, does that answer your question? Back to Rita.
Hey Tom, we've got another question here about the dialog boxes. When I read the dialog boxes, I see many references to minor sign of weakness and minor sign of strength. How do you define these terms?
Minor sign of strength.
And minor sign of weakness. Bring up what the dialog.
To be quite honest, I don't remember doing that.
What about further down?
Minor sign of strength. Because really, there's no such thing as a minor sign of strength or a minor sign of weakness. It's either strong or it's weak or it's not. To be quite honest, I don't recollect putting that in there.
Well, they have been updated, haven't they, Tom?
Philip Friston updated them. He rewrote a lot of them so they were clearer and better. And he may have put something in, but I don't, be quite honest, ever call anything minor strength or minus weakness. I mean, an upthrust is either strength, it's either weakness, or that's it. Where's the word minus?
Someone here says
Minor. It's in the dialog box, but it's in there here and there. But
we've got here there are light green versus dark green dialog boxes.
that's
What's that?
programming errors.
Oh, right. That's
Different colour dialog boxes. Well, I mean, I'd love to answer it, to be quite honest.
if you gave an example of gave us the dialog box, the sign of weakness number, we might.
Yeah, well, certainly, you could email it to us
Yeah.
in the VSA Club, and I'll gladly answer it.
Yeah.
Because very often Rita comes round during the week, and if there's any questions, she'll quickly type them in and answer them. Minus a sign of strength or minus weakness. There is no such thing.
No, minor.
Minor. M-I-N-O-R.
Minor.
All right.
It's not my terminology.
Oh.
If I'd like to see it, to believe it, I don't doubt you.
Wait, you put 5 minute down up, Peter.
5 minute down.
Yeah.
5 minutes.
Got 5 minute down. But you have to put it up. Okay, Scott says the YM 5 minute no supply test 6 bars back says minor sign of weakness in the background.
Wow.
We want 5 minute, Peter.
Oh, what's
Not
this?
the day.
Not the day. Why did I put the day?
Who knows?
I think everyone's talking.
It's a heat. You know, it's about,
So this.
we're not used to heat in England. We're used to rain and cold. And it's very, very hot and humid. Well, I'd say very hot. It's hot for us. It's about 88 or something.
Okay, shall I read this, Tom? I'll read this out
Go on then.
to you for everyone.
Yeah, go on then.
Okay, here's an example Scott has found. So, Tom, this is sign of strength, no 198, no supply. And it talks about here in the background Study the background carefully and look at the trend. This indicator works best when there is strength in the background or following minor sign of weakness in an uptrend. With weakness in the background, the indicator alone carries less significance. That's a reference there, Tom.
Right. Okay. So what the dialog box means, if you have some sort of minor weakness in the background, which may be a dodgy looking test perhaps, minus a minor sign of strength perhaps, or you may have what looks like a bit of an upthrust, which we showed you in the 15-minute. That could be classed really as a non-proof, but Philip Friston wrote that in, so I cannot comment on his English there. He's a very clever guy, and I'm sure he can explain it well to you. If you asked him, he would reply to you what that fully meant in the VSA forum. But minus just means that it's not all that obvious. But you can look at it and think, yeah, that looks like a bit of an upthrust. But don't forget, upthrusts in the rising market, they're very, very often tested on the very next bar. And that's one of the strongest buy signals you can get. Is when you see the market going up and you suddenly see a red arrow, fair enough, and the next bar is tested. In other words, the next bar is down, narrow spread, probably close in the middle, volume is pink. That's the time you're going to make some money if you go in. It means that they're testing the apparent weakness. And I suppose you could class that as a minor sign of weakness. But for those sort of questions, you need to talk or ask Philip. He's very good at answering emails, and he will answer them.
Okay, a couple of people, Tom, are asking about a sideways market. Jerry would like to have you to discuss that. But also there's a question from Rusty here on the same subject. Oftentimes in a sideways market you will see no demands as well as successful tests. Sometimes there is strength behind the sideways move and sometimes weakness. Do you look for anything in particular to predict whether the market will break up or break down through the sideways market?
Well, I've proven this to Gavin when he was here. Especially if, say, look at the currencies. And, you know, they like to tell you well in advance when the news is going to appear. And they want you to look at the news because they want to whipsaw the market around you. And this is a good way to make money for them. However, very, very often you see the market going sideways for up to an hour before the news is announced. And I said to Gavin, we're sitting here, right, okay, look, let's read the bars as we went along. And sure enough, there was lots and lots of bars which are considered strong in the sideways movement. In other words, a red down bar, the spread is narrow. It closes in the middle, and the volume is pink. There's no selling pressure. Now, even though you may get what looks like a little upthrust, right, that stops it because they're trying to make the market go sideways, ready for the news event. Right, and that's how you read these bars as it goes sideways. Do that for an experiment if you want to. Try to look at the currencies or a market where you know the news is coming out and study the bars as they go sideways before the news event. And if the market shoots up, then you'll see that there is strength in those bars that went sideways. In other words, what I call strength is when there's no supply present or little or no supply present, right? And you may see a little odd upthrust, but they're very minor. And they're creative. The fact is it's marked up a little bit or it goes up, right? And there's no demand behind the move because they wanted to go sideways, ready for the news event. And that's why they advertise the news events. That's why they want you to listen to the news events, and they make sure they come up with all these dates and times, and so that it gets you on board, giving you the impression that they're helping you. But what you're doing, you're helping them, because they're, as sure as anything, they're there to whipsaw the market around the news. So that's why Rita says it's best to keep clear of the market when news events are coming up. But what we do, when I've got time and Rita and Peter are available, we'll look at a few sideways movements and perhaps put it in the newsletter. So we'll definitely do that for you. And it's very, very interesting. Very.
Yes, Rusty, I've just put it up, the 5-minute Dow. Rusty says this is an example of a sideways movement. Yeah. But the thing about it, I often experience it, so it's 6:20 in the evening here in the UK, and between 5 and 7 things kind of slow down a bit, I've noticed, and I wait till 7 p.m. When some kind of volume and some activity starts to happen. But Tom, do you have any comment on that chart? Otherwise, you have. What?
Where's the keys?
Yeah.
I'm showing them the keys for moving right and left.
Oh, there's there.
Oh, yeah, I've got it.
You want it?
Yeah.
Okay.
Right, okay, look. Okay, here's an example here. We've got the Dow. What time frame is this?
5 minutes.
5 minutes, right, okay. So we can see it's going sideways. Now, the reason why it's gone sideways in this instant, there's your ultra-high volume look on that bar. On that ultra-high volume, it's closed well off the high look. And that's what's knocked this market sideways. Right, okay. So perhaps, are they holding it up? Friday, what are they doing? We don't know. Okay, so the very next bar's down, look. And there's not a lot of selling pressure there. Where is it there? Right. There's not a lot of selling pressure on that bar. Next bar's up, look. It's going up on no demand, look. It's come off on that no demand, look. But there's no selling pressure, look, on these two down bars, look. This is making the market go sideways. So look, you've got your supply there, no selling pressure, no demand, no selling pressure, and this is what's making the market go sideways, look. Right, no demand, look. They mark it up, look. Very skullduggery movements. Two down bars. There's a little bit more selling pressure now. Look, a little bit, not a lot. But this is why it's going sideways. And so actually, this to me looks weaker than it is stronger. Because you've got this selling here. Right, there's no demand on all these up bars. This looks like a bit of trickery here. Right, so to me, this looks weaker than stronger. But if you keep practicing that and looking at these bars, right, and you can see why it's going sideways. Because it moves on supply and demand. There's no question about that. And you can see it for yourself.
Chris says, Philip usually seems to draw a line across the top and bottom of the high volume, high spread bars. Do these tend to act as support and resistance?
What was that?
Philip usually seems to draw a line across the top and bottom of the high volume, high spread bars. do these tend to act as support and resistance?
Well, that's quite a good idea. I mean, you draw a line across the top and bottom of a bar that's showed a lot of weakness. Nothing wrong with that. And but the market unfolds bar by bar, and you need to watch out for various forces coming and going. It's quite a good idea having a line across the top and bottom. Whether that makes a lot of difference, I'm not quite sure. I personally don't do that, but there's nothing wrong with it, really.
Whoa, what happened there?
Has that just shot up?
Yeah. Oh, okay.
What's the volume like?
What's that one before it? Oh, it's low volume.
Low volume before.
All of a sudden, volume coming in.
Well, they are. It just shows you, doesn't it? Now, the only thing I could say about that is that when you see very high volume on these up bars like this, enough to knock the market sideways like that, okay, if that market fails to respond by going down with all that high volume, then a little bit of caution is needed. I've noticed this quite often, and I think Rita and Peter have too, because it means that there's an effort there for weakness to come in, but there's no corresponding results. Now, it's widespread up. Is it on news of some sort?
There's no, there shouldn't be any news according to the Forex Factory. It was only news at 1:30.
But that might not be strength anyway. It might be weakness. We don't know yet.
Yeah, we don't know yet.
No, that could be a trap-up move.
Yeah.
But I'm saying that on this previous bar, look, it's a very small test. It's easy to see now the market's shot up, look. But the volume is pink, look. There's no supply in that market on that bar. So you're lulled into inactivity as it goes sideways like this, admittedly. But in hindsight, it's easy to see, look. There was definitely a down bar there, look. And the volume is clearly low. Right, and the market shot up.
And very high volume coming now as well. Look at that compared. So it could be weakness. We don't know yet.
No. The market's there to trap you. So you have to proceed with great caution.
And Ray tells us that the S&P is doing exactly the same, and the Euro and the Nasdaq. So, but it often is. Oh yes, Fiona, the ES the same. They all act very similar. So there's a question here from Rafael, who's been very patiently waiting. How would you trade? Hang on, it keeps moving. How would you trade intraday stocks? When intraday trading stocks, is it better to take into consideration openings and smaller time frames, or trade with, for example, 15-minute and hour trend and VSA principles?
Well, I personally don't trade stocks, scalping like that during the day, but I hear a lot of people do that. I think I looked at it briefly once, and it seemed to me that 30-minute or 60-minute charts seem to give a clearer picture. But it's a matter of experiment and experience. Now, funny enough, we look at that. Is it surging up that top trend line we drew?
Yeah, that's a good question. Put up the daily.
Is it going up to that trend line?
Yeah, look. Yeah, there's our line, red line.
Yeah. So we've got a red line there, and the trend is up. So I know it's dead easy in hindsight to see all this stuff. And however, on saying that, at least we know how these markets work. And once you get to grip with these, recognizing how to read, don't forget the chart is a language. It's just like Braille. It's talking to you. And it's a good idea to check smaller time frames or larger time frames. Even a weekly chart's useful. But you saw at the start of our seminar today, we drew trend lines on the, was it cash or the future? Cash. And when you draw these trend lines, very often you think, ooh, I don't think it'll go up there. But it does. So, but at least, hopefully, you won't get conned and misled by all the Gavin calls them snake oil salesmen out there who say they know a secret, they have a secret, and you've got to pay $2,000 to go to their seminar to find out what it is. If you have to hear any of that, then you know you're being groomed for a con, because there are no secrets in the stock market. It's all to see if you can read these charts, because the market, without question, moves on supply and demand. Oh, we saw that chart. What? And I think, oh God, that's probably gone up as well.
Microsoft coming. Okay, that's for Peter. Microsoft is for Edmund. This is Microsoft.
Anyway, we'll be definitely doing the newsletter Sunday, because Rita's has to go walking or something or other tomorrow. And of course the Olympics are starting in England, so there's all that hullabaloo going on. In the UK. Anything, Rita?
Yeah, this will be our final chart. We're running out of time for Edmund. It's Microsoft, Tom, and yeah. Edmund Daly, and he'd like you to give your opinion.
All right, Peter, can you draw a trend line? It's going up, look, so well, first two lows.
Look at the longer view first. That's that longer view. See?
That's okay. First two lows.
Two lows there, okay.
First high.
There.
That's it, yeah. Right, well, okay. So it's obviously trending upwards. We know Microsoft's a fantastic company, right? Well, I'm saying that. There's some surge in volume there. What? Oh, that's, yeah, the up thrust. Plummeted down. Not a lot of selling pressure here. But when these markets gap down like this, that's not indication of a strong stock. Strong stocks don't do that. They don't gap down like this. So I would assume that if the index is going to go up, this market could go up. But it's not going to go up very far. There's too many signs of weakness here, look. Resistance level, resistance, resistance. And it appears to be acting weaker than the index. You need to select stocks that are acting preferably stronger than the index. Now, if you're not quite sure of that principle, please ask in the VSA forum and we'll answer it. Don't forget, all these stocks are traded by big trading houses around the world. And what they do, they go on fundamentals. They have investigators, specially trained, that will go out to these companies. They will check this, check that. They'll know everything about the health of even the health of directors and so on. Don't forget, the directors themselves are not experts at stock manipulation. They're experts at running their company. Now, if the reports fundamental reports are good, then that information goes back to the big trading houses. And then the big trading houses know what stocks to support, potentially going to go up. And that's why when the market falls, a good stock will be reluctant to fall. At least it'll hold. And we've seen that with Apple. It's always going up. It's always acting strongly in the index. Right. So you've got so many stocks to pick from. You don't have to push your luck and pick a stock that's not acting as strong as the index, or stronger if possible. And then when the signs of strength appear in the index, the parent index, the stock then generally goes up faster and further than stocks not acting as strong as the index. Okay?
Okay, thank you, Tom. So that's it for this week, and thank you all for coming along. That's brilliant. Tom's doing his newsletter on Sunday. This video will be archived on the VSA Club. There's one more question, Tom. Who asked that question? John. Yeah. So, Tom, that move up just now, which started a few minutes ago, is quite a move, it seems. Is there any way, looking at the chart, even now, of course, with hindsight, that you could have looked at the chart and said, well, yes, that's happened because of such and such? Can you say that?
Well, it's easy in hindsight because we showed you that even the bar previously was a very, very small test. It went down, narrow spread, the red bar, closed in the middle. The volume was clearly very, very low, less than the previous two. And there was probably, we don't know, but there was probably some sort of news came out there. But in hindsight, you can always say, well, this happened, that happened. It's not easy to spot these things, especially with that high surge of volume that made that market go sideways. But the market's not there to help you. It's there to get you on the wrong foot and make money out of you. I'm sorry, but that's how it works. Anyway, I say thank you very, very much for listening. And as Peter said, we do the newsletter Sunday. And if you any questions, please put them in the forum.
Thanks, Tom. And I hope Tom will agree with what I'm about to say, and that is that you have to wait for a good principle to show up before you take a trade. So you can't predict every single move before it happens. As Tom says, it's not there for you. So if you see a principle, then that's the time to trade. And no one, I say no one, we don't know if anyone can, but we can't predict every single move that takes place. Is that right, Tom? Tom's shaking his head.
In hindsight.
Yeah, Tom can say it's in there in hindsight, but of course what we're looking for is obvious principles so that you can take, if you like, a stress-free trade, relatively speaking. So with that, we'll say thanks for coming along, and we look forward to seeing you all next week. So take care, have a good weekend, and we'll see you then. Bye-bye.
Welcome to GoToWebinar, Web Events Made Easy.